Morning, everybody. It is the 21st of July. I'm David Maris. Robert Morrison and Kevin Baker join us today to talk about different stocks, the markets, a whole bunch of things. I'm going to kick it off first with Robert to talk about some trades that you did and one non-trade that you did. But let's start it off with you.
Thank you, David. Yes, in the last week, I was busy making some incremental trades to my long portfolio. Two names: one's a buy, one's a sell. The first, let's go with the sell. So, Similarweb, ticker SMWB, was an ill-fated attempt to convince the world that data as a service is not software as a service. And in SMWB, it didn't matter. The stock went from a high, I think, last year in the teens to $2.20. And my formula had me catching the falling knife at 8 and change down to 4 and change, where I depleted my budget for such a company. So, with all the news about potential encroachment in their business and devaluation of their moat from acquiring massive amounts of public and private data by Claude or by ChatGPT in a plugin, and having the world say this stock could go to zero, I decided to book a small profit in my position and sell a chunk of it. I'm not out of it yet, but I'm still holding about 20.
Uh-oh. He's frozen in time.
Retro.
Oh, you froze there for a second, Robert.
Since I bought it.
Robert, you froze for a second. Maybe if you could rewind for 30 seconds and just tell us what did you do? We got to the stock part.
Oh, I froze for that whole time. If I freeze again, I'm going to have to relog in because this has happened a couple times this morning. Okay, guys, you let me know. All right.
You were saying your remaining position in Similarweb. That's where you ended.
Yes. It's it had an infinite decline. It had a big bounce. Since I bought this stock, the fundamentals have changed a little bit for the negative, although they're still good. And worst case scenario being AI related implosion of the business model with a competitive product from Claude or ChatGPT. I was going to take a tiny profit or break even and declare victory and sell a good chunk of my stock. So it's a stock that I turned out to be early on when I was buying it. I averaged down. I got even. The CEO resigned. The numbers came from mid-teens growth to 10% growth. The break-even year from profitability slipped from 27 to 29. So I just decided I could put my capital to better use. I got very invested with price performance in the last few months. So I wanted to raise some cash. So I picked the push in Similarweb as a choice to raise some cash in the last week. Okay, that's the first trade. The second trade is inTEST, which is a different kind of trade. That's a semiconductor related and electronics related capital equipment company. So you put the chart up there. We bought that at 7 and 8 in the last year. I was probably short term in most of my stock, and I still am. And at $20, I decided not to sell a share of stock. And I knew I could see $12 again because I said if it would go to 12 to 13, I'd buy some when it was 18. And it hit 12.86 last week, and I decided to add to my inTEST position. So inTEST is a valuation call. It's one-time sales. The peers trade for 4-time sales, 3-time sales, 5-time sales. Their customers trade for 10-time sales and 15-time sales. So They're the worst house on a glamorous block in value. Okay, and I think there's a big turn in their business. They're not as exposed to memory and logic as I would like them. They do have some, but it's a small portion of sales. They really sell to analog and mixed signal guys. That might mean a lot to people, but it's sensors and chips that manage power and and see things and measure things. It's real life analog signals. It's not processing data. It's measuring real life things.
So
And those
two questions on this one on INTT. So first, if somebody's just looking at the chart and they say, "Well, I don't know this company that well," why was it in November and January like $7? I understand you wanted to buy it back at 14, but if my worry is that I go back there, what was going on there that made it
yeah.
so depressed?
Well, it could go back to 7 or 8 if the whole economy rolls into the crapper and they start losing money again. They were losing money. Their cycle peaked bottomed a couple of quarters ago when they were losing a little money, breaking even, and there wasn't a lot of love for analog and mixed signal semiconductors last year. So they're on a totally different cycle than the digital memory and digital logic semiconductor chips. So their biggest customers were like ST Micro and Texas Instruments and Infineon and companies like that. If you look at a chart of ST Micro, which is like a pure analog mixed signal company and doesn't have stupid American uh, portfolio managers paying absurd valuations for it like Texas Instrument does. Look at ST Micro. I think last year it hit $18, and it was in the 30s in the fall, and is now, got as high as 70. So that's a good example of one of their best customers.
Yeah.
So it's sort of following the industry. So I have them making $1 next year, and growing revenues 15% this year and 15% next year. So I would hope in this product cycle, this new business cycle for them, they could eke out a $1.50, $1.60 run rate in earnings in 2 years and trade at 20 times earnings. So that my target has always been $30 a share. Last time at 25, I emptied out my entire long position and from 18 to 25. And my goal, I had 20. I could have taken a short-term capital gain, big, nearly triple. And my cost basis is $7. I was saying 7.11, but I calculated yesterday as $7.27. So I had nearly a triple in the stock. I didn't sell a share because I honestly thought in this boom for semiconductors and data centers, I wanted to have two stocks that would work if that continued to work as a theme, almost insurance against the AI thing continuing to boom. Everything else I have is not tied to data centers or AI or semiconductors. All my other stocks. So I just decided to keep this because it was never anywhere nearly as expensive as its peers. And in dropping to 12 and change from 20, it's actually a good buy again with good fundamental news coming out. So yes, it's up from the bottom of 7. It's also flat with where it's probably been for 10 years and down from the high last cycle of $24. So that's 12, 13 right. Pretty cheap compared to 24.
Kevin, what does the chart say to you?
I was struck by the it looks like a mini me of STMI, ST Micro, which makes sense, right? One man gathers what another man spills, and it's starting to respond to the success of its customer, and I like it. This is a nice breakout here above the $10 level back in March, and this is a base that's consolidating between 14 and 20. And it's responding well to earnings reports. So I'm with you. I'm glad you didn't sell any.
So,
all right.
So if I didn't own any stock, I would buy a starter position here and even though it's a large position for me, I added a bit to it, last week, and then fine. So I think it's in the right place at the right time, assuming the data center build out gives us another 12 months or 6 months. I mean, I would hope it's 12 to 18 months, and we could take that cyclical growth and put a fair valuation on it and get 20 times earnings in a $30 to $40 stock, where I'd be happy to sell my stock. But for now, it's just too cheap to sell. It's at a valuation level that's 1995 valuation level. You don't have any. The market's over 3 times sales. The average semiconductor stock's probably 6 times sales, and many are 10 times sales. So at 1 time sales, they could sell this business for 2 times sales tomorrow if they wanted to. It's that cheap. So
To whom?
you can't find many valuations like this, especially in that sector.
Who would be the buyer? Any favorite
Well,
names?
the, yes, there would be probably 2 buyers, because they have an electronics business, manufacturing business that would sell to somebody that had manufacturing, um, testing equipment, and then they would sell to the semiconductor capital equipment guys. So
Okay.
they could sell to their customer like Kohu, they could sell to their one of their competitors like Amtech Systems, they could sell to, and just we don't have a lot of manufacturing companies in the US anymore. I
Yeah.
can't think of who's making equipment that tests other equipment, right? Because all that's been moved abroad where the testing is done. But they have an industrial component and a semiconductor component.
All right. So they're in the sweet spot. So what else did you have for us today?
Finally, my the bane of my existence, Ceragon, which has been $2.30 forever. That's where it is today. Announced a $70 million order. This come in with a customer in Asia Pacific. And they announced a $90 million order a couple of months ago from India. And finally, their new products, which are based on the first new transceiver chip, system on a chip for the radios in the industry in 11 years or 12 years, and is heads and tails above any of their competing product. This this chip is giving them products that have capabilities that the industry doesn't have. So I've been waiting for this for 2 freaking years, guys, and they're finally starting to show. We also know they won another Asia Pacific customer, and it was their entree, so it wasn't this one. And they came to North America last week or 2 weeks ago, and I heard they signed 3 to 4 new contracts, including a small one they announced in Mexico that was 4 million for just 2 years. But that was software and services. That's a very high margin business for them. So I hope that with Nokia's business imploding because it's for sale that competes here, that's the biggest customer. The Huawei business going away because the governments are finally forcing Huawei out of national telecom carriers around the world, especially in the U.S., in Europe, and in Asia, where in Africa and South America, Huawei owns the market because they give away the product. But in these other places, the governments aren't letting the telcos buy Chinese companies for security reasons, Chinese equipment. So, I would hope that we have a period of very surprising order growth, backlog growth, and followed by sales and profit growth in the next, 18 months. What I've been waiting for 2 years.
And then they'll get taken out. So $200
Uh,
million market cap. This is a company
yeah,
where it's a bite-sized acquisition, right? I mean, this
right.
is
400 million in sales next year at least, maybe closer this year. Half a sales, point 0.5 sales. I've never not doubled my money in a point 0.5 sales hardware company in my career, 44-year career. And I doubled my money in this because it went to 6.5 last year or 2 years ago, and I didn't sell it. So I had nearly a triple, and I decided it was not expensive enough for me to sell, which in hindsight, was a knucklehead move. But, you know, hindsight's perfect, and we don't live in a perfect world with foresight or what we experience today. So
exactly. All right. Well, a bunch of interesting ones. That's a really, I think that one just gets acquired. It's just, they just throw up some good numbers for a few quarters, and then someone says, "I need that growth
They
done."
they they're going to become the 800-pound gorilla in the business, in my opinion. And then it's a question: will someone buy them? But they also are working on a data center product and a satellite product. So if they hit either one of those, if they ever get a big order from someone named Starlink, I think the stock would trade a little better.
Yeah. All right. Well, let's move over to Kevin. Kevin, what do you have for us today?
First off, I want to send kudos to the Longwood Gardens team, the horticulturists that do Robert's backyard, which I guess
Thank you.
that's absolutely
Thank you.
gorgeous.
Well, like
Yeah.
you said, it's Flower Town is appropriate in my backyard.
Amen. No, I like it.
The
I like
problem bakes is it's the baking good. It's FLOUR, unfortunately.
it. I
We
went
get you.
through over the last couple of days 5,500 charts, like I want to do, like I am want to do, and I do this, and I kind of say, check my biases at the door as best I can, and see what I find anew, and it's I thought I'd see semiconductors or DRAM or whatever, and I'm finding community banks. First Trust Nasdaq Community Bank. I'll talk to Charlie about this. Charlie Peabody, our banking expert, offline. But like this is one of the prettiest charts out of 5,500. I would argue it's probably in the top 20, and it's three banks at the top that I've never even heard of, and I'm kind of intrigued by it.
What's that symbol again?
This is sorry, QABA, First Trust Nasdaq ABA Community Bank Index, and it just suggests that there's other things to do besides AI, and it also suggests that this looks, it isn't all the money center banks with the investment banking fees and the capital markets revenue. This is just blocking and tackling. This is net interest margin and commercial real estate, arguably getting better. And kudos to this company that launched this, in the jaws of the financial crisis back here. But I don't know. I'm just intrigued. I haven't bought it yet, but I'm going to talk to Charlie and do some work. But and Scott Besson has talked about re-energizing the community bank community, and so we'll see what goes on here. But it is what it is. I wish I was there at the 65 breakout. I don't know what I was doing. Something terribly important, of course. But it's community banks are. Yes, I know you're probably yawning, but it's the market is what I take what the market gives me, and community banks are looking really, really good.
All right, there we go. Quappa or whatever, however you would say the symbol QABA.
Yeah. Now the next is DBA, and this is with all the limitations. This is the Invesco DB Agricultural Fund DBA, and they buy futures, and they buy agriculture futures, as the name implies. And soybeans, cattle, and corn are the top three. And so you got to worry about the decay of rolling over the futures and all that. But this has been pretty flatline for a long time. But the near term suggests, especially with soybeans, which I've talked about in the past, that and I don't know if it's Strait of Hormuz concerns, fertilizer, or El Nino La Nina events, but the cattle situation is especially. I don't know if if you buy steaks as much as I do, but steak prices are absolutely screaming, and so again, this is not a buy for me yet, but I'm paying attention to agriculture as a potential theme as we go into the end of this year and the beginning of 2027.
That's a really interesting one. Yeah.
Lastly, and I finished with this because I know how to do this. This is a segue to my healthcare expert.
Aha, there we go. It's such a
Bi-
pro.
Biotechnology, both IBB and BBH, and they should look similar because they have the top three components: Amgen, one of the granddaddies of them all, Gilead, and Vertex. and this kind of coincides with the XLV. Healthcare services looks pretty good, but biotech is really looking terrific. And and I can't point to a big drug that I've heard of that has been approved that warrants and the Lilly's not in this index, right? They're in the pharma index. They're not in biotech. So after a long time in the desert, biotech is back in vogue, and I don't know what you're hearing as for reasons for that, David, but or if you own any of those three names, but this is clearly one of the most constructive charts out of the 5,500 I go through.
Yeah, so I've been saying we haven't been on the show together for a little while, but I've been saying like the BTK is where I'd favor over pharma. Recently, I kind of said, well, maybe pharma a little bit is just getting better, positioned because BTK has had such a run. But to be honest, it's deal flow and science. I mean, the science there have been lots of announcements of different drugs, even a large cap company like Merck getting approval for a cholesterol drug boosts the biotech business, but mostly it's M&A. Companies have been buying each other, left and right. They can't. Lilly seems to buy a different company every day, but that's what you do when you throw off tons of cash. Talk amongst yourselves for one quick second. I have kind of an emergency call here that I have to take, so just finish up for a second if you can.
You got it. No problem.
Robert, your solo show was fantastic. So kudos to pulling that off.
What should you say?
I thought you did a show that was in your bucolic garden just by yourself the other day, and I thought it was fantastic.
I did a buy and a sell. So
yeah, no, you're killing it. You're killing it.
All right, sorry about that. Okay. Big family, cool. Lots of stuff going on. So, okay, I'm going to try to be quick. So first, on the BTK is doing really well, mostly deal related. I want to talk about a company. I don't know, Kevin, if you had anything else or if that was kind of your.
No, that's it. I have not bought any of those, but I'm circling the wagons, and I will obviously update everybody when I pull a trigger on new buys.
Yeah, so I've talked about a number of biotech companies that I own. One is FDMT, Frank David Montana, MT, 4D Molecular, working on an age-related macular degeneration disease. And I met with the company 6 months ago. You never know if these things are going to work, right? Because that's what you do clinical studies for. This is going to reduce the burden of injections for patients who have to get injections every few months. And it looks like I think it's going to work. But I size this to the point where, if it goes to zero, I'm not happy about it, but I'm betting that it does work. It's done really well. It's up 35%. Yesterday they announced they're going to do an analyst meeting in the fall to go through some of the science. If I were kind of sniper shooting in biotech, not looking at the index, and this is one that I would own.
Hey, David,
how
long do they stretch out? Do they have to go to the back of the eye for the injection, and how long can they stretch out the interval between the injections?
Yeah, so basically, instead of going twice a year, you could be once a year. You could even be longer. So for anyone with older parents, that's kind of a challenge, right? If you have to bring someone to the doctor 4 times a year for an injection, you're talking about an all-day commitment because they can't see really well after that. You have to drive them in, and it's also a lot of anxiety for the patient. Also, for elderly patients who have age-related macular degeneration, you don't really want to injure the eye because an injection to the eye is an injury. And so while infection's very rare, it does happen. So the fewer injections are better on so many different axes, but it's one that I really like. I really do think that they're trying to help patients. They're not flying around in private jets, eating sushi and posting about it as a CEO of a company. Oh wait, is that another segue to Bausch Lomb and Bausch Health? It actually is. And I'm not joking about what I just said. That's if I worked for a company where the CEO was taking photos on a private jet, going to lavish weddings in India and doing all sorts of crazy things, and at the same time promoting products that aren't even their own, where he's invested in privately, in private companies, where he's like, this is a groundbreaking product. This is amazing. I'd be embarrassed if I don't see how any employee there doesn't walk out. But the investors kind of already have. If you look at the BHC chart, you can see now BHC owns something like 88%, 80 some odd percent of BLCO. So you can look at the BLCO chart and say, oh, it's up, it's down, whatever. It's irrelevant, because what will happen when BHC circles the drain is it will pull down BLCO. I want to explain this to people. I don't understand why investors don't really understand this. So BHC, they have a product called Xifaxan. It goes off patent in 2028, 2029. I say it like that because someone's allowed to launch earlier than when the patent expires. So it's effectively the product goes generic earlier than the patent because they've allowed somebody to launch early. What happens when a product goes off patent? The price drops by like 90%, 95%. In this case, it will definitely be that because there are lots of filers. Well, when that happens, you don't make any money on that product anymore. And in fact, about 6 months before that happens, the pharmacies stop ordering that product because they want to bring the inventories down. They don't want to own a whole bunch of expensive product that all of a sudden goes to the pricing goes to zero. So you'll see a slowdown in mid 2027, so like a year from now, year and a half from now, and then I think the EBITDA story will really come into play. What am I getting at? So if you just run a simple Altman score on Bausch Health, now this is according to Gemini. I'm just going to tell you that. So their current Altman score is 0.01. The safe zone is greater than 3. The distress zone is less than 1.81. So to give you an idea, it's like saying you're in a hole. Robert's laughing because he knows the number. The scale is really weird, but if you just say like you're at the bottom, you're really like that's. Now, what happens in a bankruptcy if there's a bankruptcy? Oh, I also asked Gemini, what's the likelihood of a bankruptcy? And I'll give you what it says: 75 to 85%. Now, okay, so lots of these things try to give you a little leeway so that they're not wrong. So we'll just say 75 to 80% is what Gemini is saying. Now, what happens at
80%?
What happens if I told you I have a great stock for you, 80% chance it's going to go bankrupt, but 20%, you're saying there's a chance. Okay, so what happens when when you own 80% or 90% of another asset that's kind of trading around? Bausch Lomb is doing its thing, and they sell eye care stuff, and they do an okay job, and not been consistently profitable, but let's just say that they do an okay job, we'll say. Well, the bankruptcy court will say, okay, we now are going to liquidate that. Debt holders, you now own this. They'll either do a debt for equity swap, or they'll say they'll force a sale of it. Well, if you own BLCO, that's your worst nightmare. You don't want to be held up in bankruptcy court. By the way, lots of funds just won't own it. So I think that you are a year and a half away from, look, it's already playing by my playbook. BHC is showing you, and I've been talking about this for a while. I pulled up for fun this guy from NYU, this professor, the guru of valuation, they call him, Demourodorian or whatever. He did a whole presentation on Bausch 10 years ago. And he said, I bought it at 32, and then I doubled down, or 22, and I doubled down at 14. And now I think my bottom is really going to be 13. And then he walks through it for 20 minutes, this most ridiculous valuation. He's like, well, essentially, if I looked like Brad Pitt, I'd be famous. You're like, okay, great. If you were that, if that turned out that way, it hasn't turned out that way. He's been very silent about it since then. My point of bringing that up is the experts can tell you whatever you want. And Kevin, you mentioned that you've seen a couple notes recently. I saw Doug Meehan put out something from RBC saying, this quarter looks pretty good. The quarter doesn't matter.
Yeah.
It doesn't. If your product's going off patent, the quarter doesn't matter. Like, oh, hey, I'm on the Titanic. The band sounds really great. Okay, good for you. Nice try. So I see zero reason to own this stock. I'm short both of them. They've been great. Since joining the CEO of BLCO, the stock market's up like 85%, and he's, I think, down 5%. Meanwhile, it gets paid millions. Don't ask me how. A blind monkey could do better than that, but unfortunately, blind monkeys don't negotiate with the human resource department contracts. So, with that, any other news?
I have a
Anything
blind
else?
squirrel in my backyard, but I don't have a blind monkey.
Yes, well,
David, what's happening today besides your commentary that's driving the stock down so much on 3-4x normal volume over here?
Yeah, I don't know. I mean, I think that
Did we get a chart of this? I would like to see a chart. Does anybody have a chart of this?
This is Bausch Health. It should be on the screen. Am I crazy?
Oh, okay, I didn't see it. I'm sorry.
Am I
I didn't
nuts?
see it. Now I see it. Yeah. Wow.
By the way, that's like a 1 year chart, right? You should pull up the 5
No,
year.
this is longer because I wanted to see the time when the CEO joined. Give me a second.
Oh, yeah.
Which is back here. Yeah. Well, okay. Yeah. This is the 1 year, but
Yeah. You want to see a 5 year. The 5 year is like, it looks like the patient has died. You're like, okay.
Well, here's the new CEO coming in, and apparently he was really popular back then.
Yeah.
As the stock plummets through the aswath-damotaran level of
Great call, David.
Of 14. But what strikes me,
And by the way,
here, Dave,
it's large and liquid, so that's the greatest part of it. That's the what's that?
where's the debt trading? And I don't mean to put you on the spot.
I haven't checked today. So the last I checked, it was like in the 80s. And as we all know, since we're old, like debt doesn't live in the 80s.
No.
It's like that's a sign that you're going to go one way. Now, they were very successful. They did a very good job in pushing out the debt. I don't know what these debt holders were thinking, but they pushed. Well, actually, I do know. Because they, I think, doubled their return. They refinanced a whole bunch of debt that was due in the next couple of years to pass some of it past the patent expiry, but they had to obviously raise the rate a lot. So I mentioned that guy Doug Meehan for no reason other than to say two things. One is he was a big proponent of BioVal. So just to give you a sense of how good he is at what he does for a living. The other, and I never snipe at other analysts, but this one I have to. To say, hey, the quarter looks good is the dumbest thing you can say about a company like this. You need to say, what are they going to do?
What else is the guy going to do? I mean,
Well, the reason I think that these
they sell before it goes to zero on the good quarter. That's what.
That's by the way, I think that's what these banks are thinking is that, listen, at some point, maybe they'll pull the trigger on selling all this equity to the market. And if they're going to sell a few $1 billion worth of equity, we want to be on the, hey, we love you bandwagon.
Right.
But we'll see. Again, I never want to own companies run by dopes. I'm going to leave it at that. I'm not going to say that this is that because who knows, I don't want to diminish anybody, but generally speaking, I don't want to own companies run by dopes.
And I normally don't see head and shoulders tops of stocks that are down this much, but just take a look at this level here. This is April 11th. That's 425, and we're 30 cents away from that. And then look at these two lows here over the last 5 years at 4. So if you see closes below 425 and 4, it's going to go splat.
Yeah. Well, let's see. again, individuals probably shouldn't be shorting stocks anyway, but sometimes it's so much fun. So with that, everybody, have a great day. It's only Tuesday. We have a whole rest of the week to make money. So for Robert Marson, for Kevin Bakes Baker, I'm David Maris. Go to wallstreetbeats.com, subscribe, get all our details behind the scenes, and we'll see you on the next show.
Thank you, everyone. Thank you, Jen.